Great. Well, hello everybody who's joining us. We'll give it another minute or so just as everybody joins the webinar, and then we'll kick off. Okay. Well, yeah, my name's Paul Miller. I help run Bethnal Green Ventures, and we're delighted to welcome you to this webinar about the differences between impact tech investing in the US and Europe. And we've got a fantastic panel here, which they'll all introduce themselves as we go along. But I thought it worth just giving a little bit of background as to why we're doing this. We think it's got to a really interesting point in the impact investing, the tech for good world, where this really is a global movement now of investors and startups working on really important problems with technology. And a growing group of investors, whether that's institutional investors or individual investors who are interested in that as well. And it struck us that actually there's still a bit of a not a joined up necessarily world between the US and Europe on this, and there are some differences. And I don't know whether Wes remembers, but actually I met Wes just over 10 years ago when we were planning Bethnal Green Ventures, and I was on a trip to the US. And to be honest, I can't even remember how we were introduced, but we met and I was like, oh no, somebody else has got the same idea. It felt like, there was, there were a handful of people in the world who really spotted this opportunity for tech and impact and investing. But they were the two, BGV and Better Ventures, had grown up exactly the same time on completely opposite sides of the Atlantic. And I think, the ecosystems have moved on a long way since then, but and there've some real similarities, but also some differences. And that's what we want to tease out today in this session is what are the differences? What are the areas for collaboration, the areas of competition between the EU impact tech ecosystem, which we include the UK in for, just for the political statement out of the way, and the US. So I'm going to hand over to the best person we could think of to chair this discussion, because she is a true transatlantic. Amanda is American and has a huge amount of experience over there, but currently you're in Lisbon today. And has been a great friend of BGV and the Tech for Good ecosystem in the UK as well. So I'm going to hand over to Amanda, who's going to take us through the discussion.
Thanks so much, Paul, and hello, everyone. Thanks for joining today. As Paul said, this really truly reflects my identity as a human. Born in America, lived in the UK for 10 years and now in Portugal. Really excited to be hearing from some of the leading voices in these geographies about what we're seeing about the evolution of impact VC around the world, but specifically US, UK, and Europe. So without further ado, I will introduce our speakers and dive right into the meat of the matter. And first of all, Andy, Zoe, Wes, welcome. Nice plants, Andy and Zoe. Real and not real. Wes, beautiful wall. We're calling from all over the world, and I just wanted to actually kick off the conversation with a question that will help you prime your intro and share with the group who you are, which is, where are you today? Where were you 10 years ago? And what has your experience of the impact VC market looked like over that period, over that decade? How has it changed? So Wes, would love to start with you as managing director at Better Ventures and get a sense of where you are, where you were, and what you're currently working on.
Sure. Thanks so much, Amanda and Paul. And it's great to be here. And yeah, Paul, I do remember meeting 10 years ago. And that was right around when we started, as you pointed out. 2011 was our inception year. We started off as an accelerator program because that was kind of the easiest way to get started. We were initially based at the Impact Hub in San Francisco, which was a idea that came out of the UK, as you probably remember, in sort of 2005. This idea of a co-working space for impact-driven entrepreneurs, and so we launched an accelerator program. raised a grand total of about $500,000 for that first fund that was associated with the accelerator program. Making $20,000 investments, and that's kind of how we got our start. Very scrappy and small, and it's just been an incredible adventure over the last 10 years. Our entrepreneurs ourselves, Rick and I, starting Better Ventures kind of from scratch, and then growing it over the years. And it's really incredible to see what's happened in the last decade. And we've been out. We're now wrapping up our third fund and getting ready to launch our fourth fund. And one thing I'll just mention quickly in terms of the big shifts in the last 10 years, impact is kind of finally cool. We've been joking for the last 12 months that all the cool kids are getting into impact and ESG now. We've been doing it for a decade, and we did it for many years when it was not cool. And we made people's heads hurt when we went to fundraise in 2011, 2014, 2018. It was getting better in 2018, but now all of a sudden, people are reaching out to us and saying, "Hey, when are you raising your next fund? Because this is cool." And yeah, last thing I'll add is that we've kind of evolved our investing a bit over the years. It's always been about mission-driven companies. Where we've kind of pushed more in the last 4 or 5 years is more in kind of emerging technologies and thinking a lot about how we can invest in paradigm shifts that are enabled by emerging science and technology that are resulting in decarbonized economy, improved human health, closing the opportunity gap in society. So I think a good way to think about us is early stage investors investing at that intersection of emerging technology and impact.
Thanks so much, Wes. Old school, early stage investors over here. We now will turn to Zoe, if I could, principal at Ananda Impact Ventures. I would love to hear your story of the past decade.
Yeah, sure. Maybe I start with, if I go the other way around, and start with Ananda now, and then weave in 10 years ago from that, because I think it's a bit different. So we're on our fourth fund now. We've been around 12 years. We can compete against each other from that 10 and 12. But yeah, we've been around a long time too. We invest primarily into B2B software companies across the UK and Europe. I can't say Europe on its own anymore. I have to say UK as well, sadly. C to Series A, so a little bit later on. We've done 30 investments across the portfolio, across these 4 funds in the 12 years. And it's digital health, sustainability tech, lifelong learning, and software that encourages equality. And my journey, so 10 years ago, I was actually a founder, and I just started to raise what would now be called pre-seed. We didn't have that word then. It was just the beginning, friends and family kind of stayed, except I didn't have any friends and family with any money. So I went on. Ananda were actually one of my investors further down the line in the second fund. But my story is interesting because it shows what's changed in the 10 years, because the money and where I raised the money from is really indicative of what the UK government particularly was trying to do and act as a catalyst. And I was like a poster child at that point, because 10 years ago, I won a substantial grant from Unlimited, the Foundation for Social Entrepreneurs, which is backed by the big lottery fund. So it's effectively, quasi-government funding. And the idea was to stimulate the investment economy to start to back more for good companies. It wasn't tech for good at that point, but they approached me when my piece of software was just 7 weeks old. They saw me pitch and said, "We need you to enter this competition." And I was like, "Why? The deadline's tomorrow." They wanted 3 years of cash flow forecast. And I was like, "No, we think you're representative of what's going to happen." So it was extremely, like foresight of the investment manager of the time, Unlimited, and they put me in there. And of course, I was stood out compared to everyone else, because everything else was like social finance. And I was the technology aspect with this piece of software that helped people with learning disabilities. And then from then on, the kind of funding that I got was very much catalytic funding. So the match funding that came with this program by Unlimited drew in different people. So clearly Angels, led by Suzanne Beagle, which you probably all know that name very well. She was an extremely catalytic for many entrepreneurs, including me. So, and then through that Big Issue Invest, we're involved too. And then later on, after my angel round, Ananda came in. So I basically ticked every single box for every single kind of social investment fund that was coming out between 2011 and 2014. And it was very much, apart from Ananda, was very much government stimulated. And I think the UK government did a fantastic role at the time. They put me on this panel from the Cabinet Office, which I think, Paul, you got some money from too. It was all around stimulating the ecosystem to encourage more accelerators to come along. And so they really did a lot. And Paul, you probably know way more than me. Maybe you can balance that with some negatives. But all I saw around me at the time, and when Ananda came in on the back of all this push, that basically Ananda was private money, I was there because of the government stimulus. And that was my story. So I then joined them, a few years later to be an investor. So it's incredibly changed. And now it's a lot more private money in there. But that government stimulus, I think, for the UK particularly, was incredibly crucial.
Zoe has lived Impact VC in the UK, truly. So for anyone in the audience, exactly. You came out pretty, you're alive and well. So anyone who has questions for Zoe on the UK system, please do share them in the chat. Andy, over to you now, co-founder and partner at Uprising. You can start from now or a decade ago, over to you.
Thank you, Amanda. It's great to be here with everyone, the panelists and everyone in the audience. I think this question of who was I 10 years ago to now is a really profound one for me, in that it's a very different person here now. And I can elaborate briefly on it, but stepping back, I've had 3 tracks in my career, one as a physician, one as a professional investor, and then one as an entrepreneur. 10 years ago, along with 2 good friends, we were starting Uprising up. And as you may be able to have some hint of from the name, the ambition was to do something to really try to move the needle as best as we could in the impact space. And a lot of the focus was, sort of, what is out there that we can change? A lot, that theme has persisted throughout these 10 years, but all 3 of us have always had an interest in inner work, and it's been fun as we've leaned into that individually and together as a group. And there's been a lot of cycles on that, and sort of more of a realization of the pull of, like, whatever change can be manifested out there, it really starts with change that's manifested internally. So that's been a theme that's changed a lot for us, and including sort of what we're looking for in entrepreneurs and companies. Some other big sort of shifts for us are that we started off doing a lot of early stage. We still do a lot of early stage, but are doing more later stage now. That's a bit about me.
Thanks so much, everyone. What a cool, diverse range of perspectives we have here. Just a really quick question for Zoe came in on the chat from Pete. Who was the investment manager that took a chance on you, Zoe?
Yeah, his name was Gareth Sahir. He's actually, you're smiling, Paul. I think you know him. Works at the Shell Foundation now. Nice. Yeah, he picked me out of an audience. I was actually pitching at a tech pitch, and he was in the audience, and then he followed me up afterwards. 24 hours to submit that competition application. So.
Amazing. I love hearing that early support and advocacy. So I have a question for all of you based on I mean, Wes, you articulated this really well in terms of where we've come from and where we are now. You know, impact is now the cool kid on the block. We're getting better, I would hope to say, on impact measurement and management and knowing what impact is and what we're looking for. But where and how have the themes or verticals or sectors in which you focus changed and evolved? And especially now, not necessarily over 10 years, but where you operate. So Europe versus the US versus the UK, how has that taken shape?
Sure. I mean, I think there's two main reasons why it's popular now. Number one, many of us that have been in this for a while, including Uprising and Bethnal Green and Better Ventures, we've shown that you can make money doing this. That was always the biggest pushback we got in the early years of Better Ventures was, this sounds great. I'm sure the world needs it, but can I really make any money? We've always flipped that argument on its head and have said, our core investment thesis is that you can actually make more money. And these companies can be more successful because of the magnetic force of purpose, which enables these companies to really attract resources to the table, capital, human resources, enables them to build a brand that people want to interact with. So we see a big competitive advantage in mission-driven companies. And so that has driven interest in this field. And then secondly is just, major awareness, growing awareness of the big challenges of our time, obviously climate being the big one, and 2021 kind of being the year of climate action. We have a new administration that is very supportive of making changes to decarbonize the economy. And pump money into different sectors to help support that. So those have been the biggest drivers. In addition to that, emerging technologies are enabling things that can be done before. A great example is just in the world of synthetic biology, with the advent of low-cost, rapid gene sequencing of organisms plus CRISPR gene editing technologies. You can now use yeast to essentially program yeast and have it make whatever you want it to make, essentially. And there's a great spread in this past week's Economist just talking about the future of food, and they talk about precision fermentation and the way that yeast and other microbes have been programmed thanks to gene editing technologies, CRISPR gene editing. And so you have these emerging technologies that are enabling paradigm shifts that can really create significant impact in the world. And that's where we're investing kind of, again, at that intersection. And deep tech has gotten popular as well. There's more and more investors that are doing deep tech and they see the opportunity. You've got companies like Ginkgo Bioworks that just went public at a $20 billion valuation. You've got it's an exciting new time in science and technology. And I think that dovetails nicely into the world of ESG.
Absolutely. Deep tech meets the actual social and environmental challenges we're up against. So thanks for backing those. Andy, over to you. Any similar different views on the themes you're investing in?
I think we're doing more and more healthcare. I think it's related to sort of the interest we have in wellness generally. Healthcare is being blended with a lot of other industries, just like tech is being blended in, has been for decades. But we're seeing that, and I think, we're really interested in creative financing structures. So, how can the multi-stakeholder stuff, how, reciprocity vehicles, we're trying to be creative, innovative, and even on the, from the fund side, for example, like for the two biggest investments we've made to date, we're donating 100% of our carried interest for that, and trying to start little mini movements around that. So it's been fun to see the board members that we're with on that light up and say, oh, I'd like to, put some of I'd like to, do some of that too, and, some executives. And so, yeah, we're trying, we continue to try and be innovative, not just across industry, not just like the entrepreneurs and kind of the looking for the entrepreneurs that even if they've done, very little inner work themselves, if they're open to it, and trying to support that.
So it's not just about what we're investing in, but how the investments are done and how the businesses that we back are run. I love that. Zoe, how about you? What are you seeing in terms of themes, UK and Europe?
Yeah, UK and Europe. I was also thinking just how it's changed, again, looking back on those 10 years. The first fund was 8 million, second 22, next one 50, and this one's looking like it's going to do a final close around 100. So if you think about that change in that, the differences in the types of companies because of the returns that are required are quite different. So a lot of the early ones in the first fund 10 years ago were quite service-based. And then in a second fund, like with my company, a lot of them were in healthcare and SaaS that was coming along. And we did quite a lot around ed tech in that period too. That would be the 2013 to 16. There was a lot of ed tech going around, particularly in the UK. And then with the next fund, so 2018 onwards, we continued with the healthcare, but what was happening in Northern Europe, particularly that was coming out strong, was sustainability. Pretty strong on that front. So we branched out. Before then, it was known as clean tech, and no one wanted to go near it if you were a software investor because of the working capital requirements. It wasn't what we did. But then more software-based stuff started building up on the momentum that the hardware industry had done. You need that hardware then for the software to build on top of it. And so the industries were maturing enough for that. And we started to invest more in that, and I've done very well out of that. And now with our fourth fund, we actually do state now the ecological alongside, the social impact as it would be. And the areas that we're looking at are not that too different from Wes and Andy, combining the two there.
Wendy, I love it.
Yeah, Wendy, it's good, isn't it? But climate tech is definitely a big one for us. And one of the kind of overarching themes is systemic impact. So because of the size of this fund, alongside the financial returns, for the level of impact that we're looking at, it needs to encroach into other areas beyond its own industry, changing behavior of people, of governments, of entire industries, and how they contribute to that, and looking at it from that. So our approach to impact has matured as well, and has to, given the size of the fund. So quite some changes.
Very cool. We have some questions from the, we have so many questions from the crowd, which I'm loving. I love pulling together a session based on what we think we care about, and then actually seeing what the crowd cares about. So I prefer that way. And I think there's a question about the expectation around impact measurement and management. We've had it in a few questions, but really, what do you expect when you're looking to invest that's already happening? What do you do yourself in diligence? And then maybe how do you work with your portfolio to improve or evolve that over time? You can answer any bit of that, but especially as it relates to US versus what you're seeing in Europe, I think the audience is interested.
I can jump in on that if you like, in terms of the
Love that
BGV approach. I mean, so because we invest super early, we still have the program, and then we make the follow-on investments from the companies that go through that program, and that really enables us to help teams to get the impact management and the impact measurement in place. And I think that has been quite helpful. And actually other investors have told us that as well, in that they know that if teams have been through BGV, then they're going to have a sensible approach to impact management and impact measurement. And that's been quite useful. So for us, it's about like helping teams to do it. We don't expect them to have done it by the time they come to BGV, because we're investing at such an early stage.
Paul, is that your sense, is that it's similar in the US? And then we leave it to Annie and Wes to say it's different. But do you think there's a unique way? It's a unique thing that's happened in the UK or Europe?
It's interesting. So where's it's interesting. So better, with Better, you moved away from the accelerator program model quite quickly, didn't you? In terms of, did you do like 1 or 2 programs, or was it even just one?
Three programs over 3
3
years.
And I think we still find that there's like a real demand for our program, and that super early stage support. And I wonder whether that's a bit different between the US and Europe. That in Europe, I think like early stage founders still are looking for quite a lot of support, whereas potentially in the US, I don't know, maybe they skip a stage more often. I don't know. That's I don't have the direct experience to say that, but it does feel like there's more early stage programs for impact ventures in Europe than potentially in the US.
Okay. Yeah, I mean that we do have our fair share of programs over here as well, and increasingly the big programs like Y Combinator and Techstars are taking more and more mission-driven companies. They weren't 5-7 years ago, but in the last couple of batches of Y Combinator, there have been a number of climate tech companies that have come out of there. But in terms of what we do, so we are now including both an impact and a DEI, a diversity, equity, inclusion mandate in our term sheets, which kind of just puts language kind of front and center around the company's commitments to both of those, impact, like, building an impact-driven business, and committed to, tracking impact over time. And then on the DEI side, kind of committing to DEI best practices and building a more diverse workforce. And so we help our companies do both of those. We help them think about their impact, nurture their impact and mission, leverage it as a competitive advantage, and then track their impact outcomes over time. And we just do it, we have our own sort of internal system of doing it. We've not adopted any of the outside platforms, mainly because we just don't want to be a burden to our portfolio companies. We found that a lot of those are very burdensome they're great in their sort of goals, but at the end of the day, we just can't ask too much of our portfolio companies, but we do help them track the impact over time and then implement kind of DEI best practices.
Perfect, Andy.
Yeah, I think for us, it's similar to what Paul and Wes said. We help our companies create, and we love doing that. It's both DEI, impact measurement, even their mission statements. We've been asked to help with a number of those or recrafting those, and we love to really push too on sort of really getting to the core of the why behind which impact metrics they're trying to measure, and to deepen. And so for example, on the to put that frame on it, which works better for like deeply sort of founder driven and owned companies. But then sometimes light bulbs go off where they're like, oh, this impact measurement is helping me be accountable to it and to keep resurfacing it. But it's also super generative of ideas of like, there's ways that we can provide internships to students from, historically underrepresented populations. There's ways that we can more quickly move our products and services, our marketing, our focus to those populations. And so it's sort of like trying to, I know everyone does this to some degree. It's like not just have impact measurement for measurement's sake, but to start with the why, to start with or get to as quickly as possible the why of that, and what other possibilities can emerge once you get to that.
Yes, I guess just not to repeat anything, we have the term sheet too with the DEI and carbon reduction, and we also have founder health on there, but we also have a theory of change. So if the company comes to us and they don't have that, normally they're able to articulate it anyway. And it's important to us because that what they have at that point in time may not be have the outcomes of the impact yet, but they've got the beginnings of the output. So say they have good distribution, maybe it's a healthcare, but it's healthcare systems, and they haven't, the next stage of the business is going to be more clinically led. So there's nothing worse than having a fantastic product but no distribution channel. Really, really painful, and we see too many of those, and you want really big impact. So if they've got the distribution channel and then they're working towards this clinical goal, that theory of change becomes really, really important to be able to demonstrate that. And then that gives me my business case to sell internally as well, because that's what I use when I talk about the impact. And then once they've been approved and we're getting through that stage, we'll do an internal mapping around their impact and come up with 3 to 5 KPIs, which are linked to their business model. And those are agreed on by the company themselves as well. And they tend to really enjoy it. It's almost like the rigor. It's not onerous, but it goes back to often why they started the company. Because most of the companies, when they get to us, have been around for 4 to sometimes 8 years, if it's been a slow, painful process. So it takes them back to maybe when they were going through BGV or something like that. Oh, the stuff that I remember why I did it, and they want it there because, as they know, as they go to the Series B, the Series C, or maybe IPO, it's there, and we've got their back. We see them at eye level, and we're there to make sure what they started it out as, that company, it remains there. So yeah, there's never, not so far been an issue. I know some investors have quite convoluted impact measurement systems. I've seen them, but we try and keep it simple.
Just to chip in one other thing, actually going back to Zoe's point about kind of government support for impact investing on the two sides of so the two biggest LPs in impact investing in Europe over the last 10 years have been Big Society Capital in the UK and the European Investment Fund. And actually, I think they've played quite a big role in shaping the way that impact is measured. And certainly our term sheets and so on include things that we have to put in there because we have, in our case, Big Society Capital as an LP. So I think that I don't think there's an equivalent in the US where there's been like one big LP who's sort of shaped the way that things are done.
But Europe, definitely, European Investment Fund. We were the first impact fund in Europe. So what they were able to do, and we worked with them over 10 years ago, so pre-me, was to set up the system and the impact measurement. So if anyone's complaining in Europe about how it's set up, you can thank Ananda. That was quite forming and norming with and storming with the European Investment Fund all those years ago. So
who are the influencers? Yeah, who are the influencers in the US, Andy and Wes, who have shaped those systems for you? Or, sorry, I'll give you an out. I can give you an out as well. I think actually in Europe and the UK, there is quite this like centralized, like you feel the pressure points. Maybe it's not like that in the US, so feel free to answer differently. But I guess public support for this, and also where different pressure points are emerging on impact. So we'd love to know.
Well, one group that's been very influential here and with us is Tonic, which is started by Lisa and Charlie Kleisner here in California, and it's a very global organization, but started in the U.S. and we have a lot of investors through Tonic in our various funds, and we're just the biggest fans of Charlie and Lisa Kleisner. They're just walking the walk, putting their wealth to work. He also started the 100% Club, which is kind of a response to the Donors Pledge Club, where why give 100% of your money away? Why not, use 100% of your assets to invest in impact? So they've been very influential here in the US. And
we've got overlap, actually. That's where Europe as well, with Germany. So Charlie and Tonic have played a massive part in Ananda. So that's definitely a similarity that we have.
Yeah, we're big fans of Tonic, and Kleisner's also, and it's very different in terms of like the impact Big Society Capital and the European Investment Fund have had in Europe on the impact space. Then there's not a analog in the US. there are sort of industry groups and groups of impact managers that are coming together, and that's becoming more and more standardized and more structure around that, which is exciting to see. And then, I think just culturally, in the US, just government involvement in private sector investment has just culturally been a lot less historically, and so yeah, it is very different here. But I think that there are just sort of more grassroots, bottoms up organizations that are getting more and more established and having more mind share, and I would say very successful. And Tonic is one example of the influence of things like that. So it's been more coming from ground up rather than top down here, I'd say.
I love how we're also like supportive and loving. And I know, Paul, you started maybe with a bit of skepticism, but we've evolved. But someone asked, how do you feel about and evaluate new impact VC funds coming into the space? And also, how are we feeling about the huge the huge rounds and climate tech funds that are emerging? And someone earlier said sort of, what about impact washing, right? And greenwashing, rainbow washing for the SDGs, all of that. So it's a lot of questions in one there, but I'm curious, in the US, how do you feel when you see the weekly roundup of new impact or climate funds launched? What do you look for? What gets you excited? And what are you sort of tired of hearing in the US?
It's a great question. I think there's two sides of that coin. I think there's positives and opportunities, and there's negatives and challenges. At a macro level and a micro level for someone like Better Ventures, I think it's more positive than negative. I mean, we've got a major problem that we've got to solve around climate change, and if we don't solve it, we're all doomed. And so more money is very welcome. So the fact that General Atlantic is launching a fund, and Chris Sacca has another 800 million to put to work, and you name it. USV in New York. Yeah, there are a lot of big funds getting into this space, and so we welcome it. It's raising the profile of our industry, and just the great need that there is to solve some of these problems. On the negative challenges side, obviously it creates a lot more competition for us to get into deals. And then there is this issue of greenwashing, and I think that if you're an LP and you're thinking about some of these new funds, I would just really think hard about tenure and track record and intentionality, and I mean, that's something that we are certainly playing up as we go out to raise Fund 4. You said original OGs, and we kind of think of ourselves as that a little bit. We have been around for 10 years. We have been thinking about this for a very long time, and no doubt there are a number of new firms getting into this space because they see a big money-making opportunity, and that's not why we did it originally.
Makes sense. Andy, anything to add from the US perspective?
Yeah, I think for I agree with everything Wes said, and appreciated the thoughtfulness of that answer. And I think to add, it's just, I mean, the magnitude of the challenges I think we all feel like is, I think on the people that have been in this space for 10 years, plus like all of us, on one level, we are amazed by the growth. It has exploded, but I'm sure all of us on another level also feel like, it's still small relative to the challenges out there and the opportunities. And so, I welcome it. I think overall, like for us, for example, like we haven't even had a website, as the attendees may notice, for over 10 years, because we've just been we've had too much demand on investor side and entrepreneur side this you know, and so there's just like, and, you know, we just don't have our limitation has been just time and bandwidth. So it's, yeah, there's a really, so in general, I think, yes, there are these things to look out for, the greenwashing and the authenticity, which, you know, we're trying to even push more and more toward in, but like overall, like,
bring it on.
Bring it on.
Yeah.
And I would hope it would be even bigger, you know, and 10x, like that whole thing. Yeah.
Awesome. Paul, Zoe from UK, Europe.
Yeah, I mean, I think it's going to get a lot bigger than it is now. I think we're, you know, maybe we should have another call in 10 years time. And does anybody want to place a bet on how big kind of impact VC will be in 10 years time? Because I think it will be a lot bigger. I think there's a sense that to me the bigger risk is more the mainstream going impact rather than impact going mainstream, if you see what I mean. I think there's there's possibly going to be some big problems with mainstream investors effectively like not getting it wrong, but there will be scandals basically, and those could derail actual sort of true impact investors as well. And I think that's a bit of a risk over the next few years but I do think that it's going to be a lot bigger in the future.
Yeah, and you know, I echo what Wes was saying about it's all good, you know, having all these big climate tech funds. The founders need them. It's such a big problem. And in Europe, where the approach at the moment, let's see if it continues like that, is quite collaborative. I'm a member of something called the Rising Tide Collective, which I think there's maybe 30, maybe 40 funds that have a big theme on sustainability. And it's quite incredible, really. We don't specialize in food tech, but God, that the knowledge amongst them all and in the conversations that we have, you know, it really teaches me a lot, and we share deals amongst us. So I think this is a very, very positive approach that Europe is taking with this collaboration. And then when it comes to the ESG greenwashing, I think, you know, the LPs are wise enough to crack on to the fact that most of it's risk management and output driven, and it's not really, I mean, that's just good business. That's how every business should be. It's not making a difference. It's not making a change. And so I think, you know, people will wise up and it will move on, and they'll understand that they have to be more impactful and outcomes driven. And for founders, the way around this is, any founders on the call tonight, just ask those VCs if their carry is linked to their impact, as long as, you know, alongside their returns. And then you'll start getting down to who really is an impact VC. Values alignment.
Love that. We have, I think it's actually a clarifying question, but an interesting bigger picture question, although it's not something we all discussed before, which is around emerging markets and the role. We're talking about how much capital is coming into this, how excited we are to see 10xing of capital. But we have someone who asked from Azerbaijan whether any speakers are looking at startups in emerging markets. And then we have someone else asking if, you know, from the EU and the US, how much of your portfolio is located in emerging markets, which you can feel free to answer, but also how do you see that evolving over the next 10 years? If the answer is no, not now, not ever, recognizing the global impacts of climate and inequality, any thoughts from you guys on the role of impact VC and bridging the sort of loads of capital coming out in developed markets and meeting the needs of emerging markets? Very welcome.
Oh, it's a big one, isn't it?
It's a huge one, I know, and it wasn't really in our scope, but I feel we owe it to this crowd.
And when it comes from the EIF, you have to keep it in Europe. That's
true.
Why it's so difficult with the UK even.
Yeah.
We've had our allocation reduced in the UK. I'm now covering the UK and the Nordics as a result. You know, I've been stretched. So yeah,
just to confirm, to clarify for the audience, in case no one knows, so the European Investment Fund, from which you have investment, mandates that a certain percentage of your capital goes into Europe and or UK Nordics, right? So your hands are quite tied. Paul, Andy, Wes. Any other thoughts on this massive question?
So it's similar for us in that it's driven by kind of LP restrictions, but I'm not convinced that we're the best people to do investing in other parts of the world, because I think what a really strong part of being an impact investor is understanding the problems that you're trying to fund solutions to, and I'm not sure we're the best people to do that for a startup that's based in Nairobi. I know a little bit about it, but I'm not the best person. So I'm really heartened by is the growth of local teams who are setting up funds to do what we do in other places. Sorry, I've got you might be able to hear a bit of noise in the background. And I think that's a really interesting trend, because we've certainly seen a lot more of that recently, people raising funds to make investments in emerging markets, whether that's Africa, South America, and Asia, and Central Asia as well.
Andy, did you want to jump in there?
Oh yeah, very similar to what Paul was saying. We don't feel like we're the best people to, but all three partners at Uprising, we've have a strong interest in developing markets and have done a lot. Tabriz was the initial funder of Kiva, for example, on the nonprofit side, and my partner, we were early with Khan Academy and a bunch of other things. So what we've been doing is we've, not doing it directly, but supporting through spending time, our network, trying to direct capital to managers that are starting up in that space. And it's exciting to see that really growing. I think and sometimes when those managers are asking questions, that what's really hard is to not try and extrapolate our experience here, to those countries. So yeah.
Quick rapid question: how many of you are B Corps? How many of your funds are B Corps? 2. Got 2 and 2. Okay, and then there's a question on exit opportunities that's come in that I think is really interesting. Do you see the opportunities for exits as different at all, or riskier because of trying to create this lock of, like, as the company grows, the impact grows? That's what we're trying to back, is sort of higher impact, high returns. How does that affect exit opportunities? Do you look for certifications like B Corp or something to sort of help that locked in companies per se? And there's a question you can also jump on from Nathan of what happens as it happened, where returns were pursued over impact, even during your ownership, and you've had to step in. What have you done? So you can take any of that as you wish, but I'll pop it over to Paul maybe to kick us off.
So we are a B Corp. We have been since B Corp came to the UK. We think it's a really good framework, and a number of our portfolio companies are as well. We don't mandate it. We don't say that like everybody we invest in should become a B Corp or anything like that. But I do think it is a very useful framework. The exit thing is really interesting and very kind of live issue. I think the best thing we can do as super early stage investors is to really help them shape the business model so as it's directly linked to their impact. That, to be honest, that's the best thing. So then their product is valuable to an acquirer, both from an impact perspective and from a revenue perspective.
Exactly the same with us, Paul.
Yeah, and I think that's probably the best thing we can do, because to be honest, we have some influence over exit opportunities, but it is a long way down the road from where we first invest. And yeah, I think that's part of our approach to it. The other thing I would say is I think in the future we will see more IPOs of mission-driven companies. I think the public markets want it. There is like demand for like mission-led companies, but and it'd be interesting to see. I know there's been a bit of talk about Allbirds this week in terms of yo-yoing a little bit on the sustainable public offering. I think that's a debate that's going to get much hotter over the next few years, and yeah, but it's a good good problem to have. But I think that's where the debate will be, is more, to be honest, a lot more about sustainable and kind of impact related IPOs.
Yeah, completely agree. I'm glad you brought up Allbirds. I think there's definitely increasing demand for publicly traded stocks, and I mean, there's not that many that are B Corps, that are mission driven, and the ones that have done really well in the public markets. Like a Beyond Meat, for example, has gone from a 2 billion market cap to close to a $10 billion market cap in about less than 2 years. And for us, we back companies where the mission is so central to the product and to the business model that it really couldn't be dismantled without destroying the company. And secondly, we're backing founders that we judge to be very mission intentional. And we ask lots of questions about why they're doing this. We're looking for really, for us, we like to attract mission-driven founders that just really emulate that mission. But they've been thinking about it for a very long time. They're really driven by it. And so, and we're a B Corp. We're big fans of B Corp. We encourage our companies to become B corporations. We have people in our network that can help our companies become B Corps. And that is a good way to help lock that in. But I think the more you can build the mission as central to the product and the brand, the harder it is to sort of dilute that upon exit.
Makes sense. Go ahead, Andy.
Oh yeah, just adding to the comments, and we try to implement those changes as early as possible in the company's lifetime, because it gets massively harder. Sort of the more investors they have, the more the expectations are varied. So I think at the earlier stage it is for those things to be embedded, the better.
Yes, the only other thing that we reassure our LPs on is that we have the right to a board seat, or we sit on the board. So one of those two, that's what we tell our LPs, just to make sure, because some of the points, Series A, Series B that we're involved in, you do get a lot of investors involved. So the fact that we're there on the board is to reassure that we've got that impact card and we play it.
Love it. Well, we're running out of time, sadly. I have another question from the crowd, which is sort of I love this question actually, because it's sort of like, it's as if we're going to find a magic gem on a call and just run with it. But what is one big trend, one big impact trend that is currently being missed by mainstream investors or anyone? And Andy, I mean, I think to your points, it can be sort of impact areas or sort of the way we're doing impact. So please feel free to take this very widely. But that's one key question I want to close with. And then there's another thing here on incentives and incentive structures. So one thing we were going to talk about today that we didn't get to all, which was sort of like the role of angels in your different markets, angel investors. We talked about Tonic. We talked about how exciting it is that they're coming in. I think generally, though, we're also looking at angels, both angel investors maybe in your market, but also sharing wealth with workers. I mean, someone asked about ESOPs in the chat, and thinking about like throughout the value chain, how are we in Europe and the US thinking about sharing the wealth created, if you will, as we scale these companies and the future of VC. So I'll use that question first, if anybody is working on this, because it's come up in the chat, and role of angels in the ecosystem as well. And then I am going to come to you for your final, like, magical, what is the trend we're missing moment before we close today. Wes?
Sure. My answer maybe combines answers to both those questions. Awesome. I love the question about how do we share the wealth, because we have we focus on sustainable economy, human health, and closing the opportunity gap in society. So we do think a lot about how, in these paradigm shifts around sustainability in particular, there's going to be a displacement of workers and winners and losers. And so we think a lot about how can we really help prepare people for the future of work and sort of democratizing access to opportunity. And I think one emerging paradigm shift that I think could be great for that is blockchain. And I know it's like buzzwordy. We've been hearing about it for a very long time. It's mostly been about, just making a bunch of money in the crazy volatility of cryptocurrency. But if you really dig into Ethereum in particular, there's a lot of parallels between Ethereum, the Ethereum platform, and the internet circa 1994, 1995. And it is a paradigm shift that could very well lead to this idea of shared wealth. And that's one of the big potential applications for blockchain and for Ethereum in particular, a platform that builds a trustless system that doesn't require all these intermediaries to build trust, that can be used in a kind of like a crowd-funded-esque model where everyone sort of shares. And a great quick example is an artist who sells a piece of his or her work for a certain price, but then that value goes up exponentially in the future as that artist gets more popular. But had they sold that piece of work in the early days, they would have sold it for a static amount of money. Whereas if you retained sort of a share in that via Ethereum or blockchain, then you benefit again when it's sold in the future.
Yeah, that's a really cool idea. Thank you. Combined both into one. Anyone else?
So in terms of your angel, the ecosystem and the actual right. So I'm not German. I work for a German VC, but the stark differences I see in the ecosystems are in the UK, the angel system has lots of tax incentives, pretty incredible, actually. I hadn't realized until you wander outside the UK how absolutely outstanding they are. And then in Germany, there's no incentives. And then the ESOPs, I'd say they're more popular in the US. Maybe Wes and Andy can pick me up on that one. They're starting to get more recognized in the UK because of some of the exits and the increase of unicorns that we're having, particularly in fintech. People are starting slowly to make some money, but this doesn't really exist in Germany. There's just a real lack. A lot of the money comes from old family wealth, lots of family offices. There's not enough, what I think, new money. So that they need to do a structural change there, and that's the German government. But the one area that I see in terms of investing themes that I'm quite passionate about, it actually comes under cyber security, and it's not something that impact investing has looked into before, but online hate and fake news is massive. And I'd like to see more impact investors go into that. And I'm on the lookout.
Amazing, me too. Thanks for paying attention to that. Paul?
Sure. Well, we took a bit of quite a big strategic decision around the distribution of wealth from what we do, in that we looked around and were like, okay, who do we really want as LPs if we're going to try and spread the benefit of what we do? And we realized that in the UK anyway, the most sort of democratized source of capital is what is known as the DC pension schemes. So the defined contribution pension schemes, which are now auto-enrollment in the UK. And they have the largest group of workers as their members. And so we've partnered up with a firm that specializes in helping DC pension funds to invest in impact investing opportunities. So for us, that's the area we're really looking to move into, from the point of view of who our LPs are, because we think that is the most democratized source of capital that we hope to be able to connect to impact and then hopefully repay that in spades. So that's been our thinking about okay, how do we link what we do to a wider group of people in terms of wealth creation.
Awesome, and congrats on that. Andy, any other thoughts to close?
Yeah, I think my answer also sort of is a combination answer that touches on both questions. But one of the most exciting and fun things for us is, when you can see the start of a trend that is basically so it's obvious in hindsight almost. And we all experienced this with the impact investing space 10 years ago, right? It's sort of like, okay, you start to see growing activity, and when you're in it, it's fairly obvious that it's going to grow quickly. And you know, touching upon some previous questions and answers from this session, it's like in emerging markets, it's also very small ecosystems right now, especially in angel and earlier stage investing. But you know, there's a fairly high visibility that it's going to keep growing because the reasons for it are structurally so powerful. So I guess, yeah, like one of the themes that we see is the theme of redistribution, more equality, and that, and just trying to think, you know, think of how to accelerate it, because it's already going to go at its natural pace. But it's like, for so many of the things, both opportunities and challenges that are present in human activity these days, sometimes there's quite a bit of a lag. And so yeah, so we're doing a lot in terms of like rethinking our stories about money, you know, redistribution, and when you find things that also within that are like so obvious that like, if people shed sort of the reptile brain impulses, more cognitive biases, or just inertia from like broken parts of capitalism, not to get too abstract here, but like where you see that there's definitely going to be, you see the beginnings of these trends that make so much sense, and it's going to keep playing out. Who knows the eventual size of it? But so we really lean into that, and sort of just sort of the bigger picture thing is, you know, we think that ties that together with other things is that we think, you know, a big unexplored area is that, you know, is consciousness shifts. So for the challenges and opportunities that that we face collectively all together on this planet today, it's actually factually so different, and our experience is so different right now than it has been throughout all of human history. And like to meet those rather than with as little lag as possible. And you know, it's going to take sort of shifts in consciousness, and so we think that's going to be a huge thing going forward. And it's exciting to see sort of the initial percolations of that, to try and accelerate.
What a way to close. Capitalism is changing, consciousness is changing, ownership is changing. Thank you all for your time today. I learned, I think, a lot about impact VC and its different bits, as much as we compared across the Atlantic. So thank you all, and see you next time in 10 years when we meet again to talk about trends.
Thank you for hosting, Amanda. Thanks for the invitation.
Thank you all.
Paul.
Bye, everyone.
Thanks, everyone.